Hey guys, welcome back to Everything Money. We are here again with another video. It's Paul, Mo, and myself. Paul, I think obviously a bunch of new investors, young investors, new people who starting to invest when they're 50, they turn to YouTube for answers, especially when times are bad. The market has been very choppy. It's been down. People have been worried. And this is when people flock to our channel. So the question is, how do I get prepared for a down market? Should I be fearful? Can you please fondle and guide me to where I need to go? This is why we have you on the show. Give me your thoughts on this market currently.
So I am going to, you haven't done it in a while, guys? Follow us on Instagram, Everything Money Investing, and follow Seth, Mo, and I personally, because even though it inflates my ego, I've still forgot to do it in the last few videos. So this advice I'm going to give is to give a long-term outlook before you retire. If you have 15, 20 plus years to retirement. If you have less than that, you should be altering how you invest, but don't go to me for it. Go to somebody else because I don't want the liability. So there are two types of markets. There are cyclical bear markets and bull markets, and there are secular bear and bull markets. Secular or long-term. The average secular market, bull or bear, lasts 17 years. And this is when the market's in a major, like 82 to 90 was a secular bull market. The S&P went from like 110 to 1500. But 66 to 82, it was a secular bear market. The S&P went from 107 to 110, completely sideways. Within them, there could be bull markets and bear markets that are shorter. The average bear market, cyclical bear market, lasts 10 months essentially. Okay? Now, do I think we're going to have a bear market at some point? Yes, of course. There has to be a bear market. It's just like saying, will I get sick one day? Will I die? Of course we will have it. We can't be up forever. How should you prepare for it? My thinking is, unless you're really close to retirement, if you think you need to prepare for bull and bear markets, you are hurting yourself. You should be buying an ETF month in, month out, no matter what happens, and not paying attention to your values. Just buy the same market-based ETF and your money will grow with the market and you will beat. When you try to jump in and out, always try to finagle, what am I doing here? You're going to lose to the market. Absolutely. Because you're going to buy at the wrong times and you're going to sell at the wrong times. And you're out there looking, no, I have the ability. I can buy when times are bad. No, you can't.
Hey guys, Seth here jumping in real quick. We'll get right back to the video, but I want to let you know you can join our software. You can get access to this financial data and the new Everything Money chat right in your phone. Paul will tell you how to get it right now.
So guys, we created the software because our users wanted to be able to analyze their own stocks without having to wait for us. So we put hundreds of thousands of dollars, made the software. You get 30 years of financial data. You get access to Seth, Mo, and I, 8-pillar analysis, the stock analyzer tool, the retirement calculator, and you get everything on this main page that is coming soon. This is all included. And if you look right here, these are all the things you get. You get everything on a mobile phone. Everything we're talking about here is ready, available on your mobile app. One app for everything. But most importantly, guys, you get our Discord, our community of, now it's off of Discord. It's right in our app. You get a community of over 6,000 people you can talk to every single day about your investment ideas. If you're like them, you felt alone having these ideas about investing that weren't reciprocated by others, but now you found the community here. And this is all available for only $1 per day. Less than a cup of coffee. If this can make you 1 or 2% or save you 1 or 2% of losses every year, it will lead to hundreds of thousands, if not millions. $1 per day, 2 ways to sign up. everythingmoney.com or Patreon. The benefit of everythingmoney.com is we're not large enough yet to charge sales tax, so you won't be charged sales tax quite yet. And look at this, guys. You get all of this. Our competitors are a lot more money and don't provide as much. $1 per day. Go sign up now.
I even think that too, Paul. I think because I'm on the show, I'm learning for you, I can do that, and I still screw it up, like buying and selling at the right and wrong time. So
of course you do. And by the way, I'm going to screw it up too. I'm still emotional. Like I look at Facebook lately. I'm like, wait, maybe I'm wrong on Facebook. I keep looking at the numbers again going, no. Same with Alibaba. Maybe I'm wrong on Alibaba. Alibaba's at another 7% today or something like that. I'm like, okay, maybe I'm wrong. I don't know. But at the end of the day, that's the hardest part about investing. It's not the numbers. It's the emotional side. Because we can always look at a stock. Let's look at a stock here. Let's look at Intel. You can always look at Intel and see the max chart.
Go ahead.
if this was 2009 and you see Intel at $13 a share or lower, and this is your chart, let's actually change the chart to 01/01/1999 to 12/31/2009, or 2008. Are you really going to be the guy who sits there and goes, "Yep, it's the time to buy"? Are you honestly going to tell me that you'd be that person?
Yikes.
Yes.
It's a tough pill to swallow, guys. Why are we laughing, Seth?
No, I was laughing because I said yes.
You're
not
now,
gonna be
Mo.
that
Now
person.
you know
It's
that
not
now, but I mean, Paul. Number one, I'm laughing because I didn't know our software could do that, so that's pretty incredible.
Okay.
And then number two, someone said, it's funny, Paul, I'm in an investors group on YouTube, and someone shared Alibaba's graph. It's down 53%. And he said something like, I'm a beginner.
It's down more than 53% from its high.
It's just what's on the graph. But yeah, I'm a beginner, but this is a bad sign for the stock. Down 53%. Is this something that's going to rise again? And I thought to myself, I even wrote let's not let the stock price sway you. That's what the world thinks about the company. The financials show something incredibly different. And so
it's not a bad sign for the stock. The bad sign for the stock is that it was at $300 or $400 or whatever it was. Just because it's back to a normal valuation doesn't mean that now it's a bad sign for the stock. It had to come down 50%. It was overvalued.
No, I don't think it was overvalued. Mo, if you go back and look at the videos, even you agree. I think we were worried about China. Like, are we right on China? Is China something to trust?
But we did say even when it was at its highs, we would say if this is a little bit cheaper, then we would go and be buyers.
Oh, okay. Well, I don't remember because we've done 300 videos. But the bottom line is, I look at it going, that's called recency bias. If your decision on investment is based on the recent performance of the investment, how is that that means that you prefer to buy clothes and cars and houses as they're going up in price. Actually, with the houses, clothes and hamburgers and food, like Warren Buffett always says, the Buffett household is very happy when hamburgers are on sale. Well, the Gabriel family is very happy when investments are on sale. You got to get yourself into that mindset. If you just look at the stock price, then you're a first level investor. You don't think very deeply. You're actually a lemming. You're actually a moron. That's just the way it is. Now, what drives stock price over long periods of time? It has never, ever been anything but fundamentals. Ever. Over long periods of time, it's always fundamentals. If anybody says otherwise, they are wrong and stupid. So something tells me Kathy Wood probably says otherwise.
So in preparation for what's to come, there's a ton of you. Go on.
Keep your ETFs. Buy every month, month in, month out. Don't touch them. And when you retire, you're going to look up and say, wow, I have a lot of money. If anything, if you have the balls to do it, buy more when things are down. When I say down big time. When everybody else is telling you how stupid it is to own stocks, that's when you should own more of it. But don't do anything. You have a plan. Your plan's going to is going to happen over decades. Stick to that plan. You wouldn't divorce your spouse because of one fight. So don't get rid of stocks because of a bad year or two. You wouldn't divorce your spouse over a bad year. Now, major catastrophes, maybe so, but even then, investments are better because you at least have a chance. The economy is going to be around, and the stock market's going to do what the economy does over long periods of time. The economy grows, stock market's going to grow if you're buying at a reasonable price, at a reasonable value. That's it. It's very simple, but it's not easy.
Yeah, we get this question a lot in our community, Paul, on our Instagram page. People say, well, if it's so bad looking, forward looking, if the market's going to crash even further, do I wait? It just seems so hard to buy into companies as they're falling, this falling knife type of mentality.
You're going to wait for the right perfect time to buy. You're never going to pick it.
Well, again, I think I'm going to pick it,
Of course, that's because those who think they're going to pick it are the same morons who look at the stock and say, if it's going, it doesn't make any sense. It doesn't make any sense whatsoever. Just stop doing it. Just if it hits the price that you like, you buy it. And who knows where it's going to go from there. If it goes further down, make sure your assessment and analysis was correct. And if it's still correct and it's still the same, you buy more. At some point, you stop. I believe in diversification of value stocks. Others do not. Others believe in owning 10 stocks that you know inside and out, own 10%. I believe in owning 30 or 40 stocks you believe in.
So with all that said, you can make money on the ups and downs. You can trade options, you can day trade, you can swing trade. Mo will show you all of this in the Bidnast Nation, our trading tier of our community, which you can join. We'll tell you more later. Mo, show us a good trade you're thinking about nowadays.
So guys, when it comes to a bear market, it's very important that you are able to short stocks. I know that's a scary word for a lot of people, but shorting it on a chart versus fundamentally is a lot different. I just one Saturday ago, I did a weekend exclusive seminar for people in the bid and ask only, and we talked about shorting for 1 hour straight. So, of course, you're going to see this in a lot of companies. This is PayPal, a great run up, moving to these all-time highs, and then you see this fall. Just because the stock falls doesn't mean you can't participate. Let's zoom in. Let's just learn how to short. It's the same thing as when you see me saying you're over 32%, you're going through the sweet spot, buying on engulfing candlesticks going up. When you're coming down, it's the exact opposite. Coming through the sweet spot, with your red line under yellow, engulfing candlesticks coming down, and you can just short this thing. And when we get into that overbought area and we call it a power stock, when it just keeps going higher and higher, well, we have a dog stock here where the stock price and the stochastic just goes sideways, and the price just goes lower and lower and lower. It's very important to know how to make money in a bear market if you want to do that from a technical standpoint. And if you join the Bid and Ask Nation, you can learn that. I've done tons of exclusive seminars just for the Bid and Ask on shorting. It's a great place to be. I made a lot of money during the crash of 2020 in March and April. Basic shorting strategy. Very, very easy. Come and join me.
If you want to learn more about the 8 metrics, our 8-pillar system we use to screen stocks, you can click the card above Mo's head and it'll take you to a more detailed video on that. Paul, that's our take on the bear market. I get scared. I've been learning from you for a long time, so we just got to stay the course, stay calm, 8-pillar on, and you'll be here to fondle my thumbs up all the way. I'm sure of it. Wouldn't you agree?
Probably.
That didn't seem very confident.
Fondle the thumbs up. See you next video, guys.